All right, there's a new report out that suggests that job growth is actually slowing nationwide. ADP's National Employment Report falling short of expectations. ADP is a payroll service recording just 89,000 new jobs. That new data, along with rising interest rates and skyrocketing Treasury yields, has some concern. NewsNation business contributor Gary B. Smith is with us right now. So, Gary B., the inflation rate down nearly 5% since last year. Why is the Fed still raising interest rates?
Well, a couple reasons. One, in my opinion, they always kind of undershoot at the beginning, they overshoot at the end, and meaning they're late to raise rates and they're kind of late to cut back on rates. I guess that's just part of being human, I suppose. So I think they're going to overshoot, and the main reason is they want to get the inflation rate down to 2%. Now, whether it goes there, regardless of what they do, remains to be seen, but they'll probably raise one more time, is my guess, and probably overshoot a little bit.
We've heard the word recession tossed around starting, I guess, last year into this year, and then that really never manifested. But there are other people using the term secret depression, comparing the cost of living today with a generation or three before it. What are economists forecasting for us right now?
I definitely think there's going to be a recession. I hate to be a Debbie Downer, but, I look back almost 60, 70 years. There's not been one time we've seen a spike in the Fed funds rate. So basically the Fed raising rates like we have, and they raised it from basically 0 to a little over 5%. There's not been one time in that time frame that there hasn't been a recession of some length. Even before the mini COVID recession we had just a year or so ago, which lasted, all of 2 months, there was still an increase back then in the Fed funds rate. So I definitely think there's going to be a little bit tougher times for the economy.
Let's talk a little inside baseball here then. Treasury yields reaching 4.81% this week, which is the highest we've seen in 15 years. What does that mean for investors?
Well, I'll tell you what, the main thing is what's going to happen to everyone's credit cards, credit card, mortgage rates, things like that. They're all going to continue to go up. What it means for the investor, though, is, I think it's pretty straightforward. As the bond market becomes more attractive, stocks become less attractive. You can get put it away in a treasury or some sort of bond and get a better yield than you can on riskier stocks. That's going to also suck money away from the stock market. Now, specifically, though, I'm not saying to take money out of the stock market. I think that's tough for even the savviest investor. I'd still stay invested right now in the market.
Okay, stay with your 401k, no matter how scary or rocky of a ride it is. But just any other practical steps? I mean, obviously, if people are, up to their eyeballs in debt, they don't have extra money lying around to put it in a CD or a savings account, but that's always a good idea. And then in terms of balance transfers, other ways of moving their debt around to try to lower those interest rates, do you advise anything specifically?
I think that it goes back to, kind of, personal finance 101 that you've heard from the Susie Ormans and the Dave Ramseys of the world. People really, when their own personal economy starts to suffer, if you will, they really need to be on the forefront of cutting down the extravagant expenses, cutting down that credit card debt as much as you can. So everyone's going to have to tighten up. We've tightened up in our own family. Can barely afford to buy a darn piece of fish these days.
Fish?
You just gotta look to save money wherever you can.
That's where you go, Gary. It's like we've tightened up. We stopped buying a piece of fish.
Yeah. Have you seen a price of a pound of salmon lately? Who can afford it?
You are so, Gary, I was thinking you were like, we're not going shopping. We're not buying extra furniture. We're not going to get, those nice Prada shoes. You said a piece of fish. And
that's my watermark. A piece of fish.
Yeah, that's your extravagance, your vice,
exactly.
So to speak. Always, you couldn't even take this serious topic and keep it too serious. You made us smile. Thank you.
Thank you, Adrienne.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider, and don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.